Hi Matrix, welcome to High School Accounting with JJ. So today we are expanding on corporate governance and audit reports. We're going to look at the typical exam type of questions. So I've got a paper here from the Eastern Cape, which is the pre-trial exam. If you are a matric in the Eastern Cape, definitely you have written this paper just before you wrote your trial exam. So we are on question 4. Topic is still corporate governance and audit reports. Ne? So we've got an extract of the independent auditor's report. Ne? And then we have to respond to questions. I did say it's vital for you to read your audit report, especially if you have to respond there. The first thing that I want to go to is to read the audit report, ne? So I can be able to respond. Ne? So here we've got the extract of the independent auditors. Ne? So this is what they are saying in their report. We have audited the annual financial statements of Dual Limited for the year ended 28 February 2021. Financial statements are the responsibility of the company's directors. Our responsibility is to express an opinion based on our audit. And then here's the audit opinion. The financial statements fairly represent the financial position of the company on 28 February 2021. Except for the director's fees on the statement of comprehensive income, which could not be verified as no documentation existed to verify the disproportionate increase between the CEO and the other directors. And then we've got Julius and Jacob, Chartered Accountants SA. So we have read the report. The audit, they say financial statement are fairly representation of the financial position, but there is an exception. Obviously, before we can even go and answer, like I don't know what other questions are going to be like, but I already know this is a qualified report because the auditors have said there is an exception here. As much as everything is right, but there is an exception. So that is qualified. This is a bad audit report because they say we could not verify the director's fees as no documentation existed. I'm sure those auditors, they wanted that information, but they could not get that information. That's why they decided to qualify this report. So let's go to their questions themselves, starting with 4.1. 4.1, they say, why is good corporate governance important to shareholders? So guys, before you can respond to that, you need to know, what are we talking about when we're talking about good corporate governance? Governance, we know, is how a company is ran. And then corporate, it's companies, like we're talking about big companies. So now maybe one day you'll be working for the corporate, so you'll be working for all these big companies that are out there, right? So now, why is good corporate governance important to shareholders? So this can be loosely translated. Why is good running of the company important to shareholders? Obviously, if you are a shareholder, you are so invested. You want the company to be ran very well because you've got a huge interest in that company. You invested your money, right? So it will be very, very important for you to make sure that you do get your returns. You get back your returns that because you invested money there, and obviously you want the best. You've got the best interest for that company and you want the best return on your investment. That's why. And then when we go to 4.2, identify the type of audit opinion that Dual Limited received and provide a reason for your answer. Guys, I already spoken about this one when we read our audit opinion. So this is the qualified audit report. So why do you say that? The financial statement fairly represent the financial position of the company. There is an exception, except for director's fees. You can just go that day. You are done. You will get your 2 marks. And then 4.3, an analysis of the director's fees after receiving the audit report revealed that CEO received a 30%, the CFO received 18%, and other directors received 5.5%. I think this is the increase in terms of their fees. So let's see who got the biggest chunk. Is the CEO, 30%. Wow. And then when we look at the CFO, 18%, but other directors only got 5.5% increment. So what happened? Here's the question for 4 marks. Explain why the shareholders would be concerned about this type of audit opinion received by the company. Provide 2 points. So I think in the other activity that we've done, we did talk about this, the implications of the qualified report and also the disclaimer. This is bad publicity for the company name. And then shareholders or our shareholders may lose interest in this company, you understand, and also potential shareholders may look away. They will not want to come and invest in this company, you understand that. So that could be the reason. Also, our share price may be affected on the Johannesburg Stock Securities Exchange. And then we go to bullet point number 2. Provide 3 points that shareholders would want to raise at the AGM about the reason expressed in the opinion of the audit report. So they wanted 3 points. So this is what I'm thinking here. If you are the shareholder and you've read the audit report and you know what happened, the CEO got the 30%, the others 18%, and the rest 5.5%. Obviously, you are not happy about this, and also the auditors have flagged this in their report, that hence the reason for qualified report. So what could be the other points that you can raise at the AGM? Probably you would want to change the directors. You can want to raise a motion there. You vote these directors out. You understand? So these directors maybe may not come back to lead this company. And then what else can you think of? I'm not thinking of something. Provide 3 points that shareholders would want to raise at the AGM about the reason expressed in the audit opinion. Probably these shareholders, they might because there was this the increment. It's not clear how did we get to 18%, others they got 30%, others 5.5%. For me, if I was the shareholder, I would request an explanation from the CEO, which is one of the top directors. So he can explain himself, how did they come to this decision, you understand? So at least you want him to be disciplined somehow, or you want him fired, or maybe you're not gonna vote for him again, or you want just a simple explanation. Maybe there is a reason why the CEO did this. I don't know. So those are the things that you're gonna be talking about in your exam. So guys, please go and revise your theory, especially corporate governance. This is where, even if where you are not that good in accounting, but this is where I believe you should be maxing these marks. Get these marks. All the best. I will see you on the next one.